Aloha, this is Kurt Nielsen with eMortgage Hawaii, and this is your mortgage market update for the Hawaiian Islands for March 7th, 2012. Well, we have a kind of an exciting message to share with all the realtors in Hawaii. On Friday, we hit the all-time low for mortgage rates in the United States history. I'm going to talk a little bit more about where we're at, and I'll provide you with my forecast on where rates are going to go over the next, let's say, 60 to 90 days. I also wanted to give you a quick update on HARP 2 now that we have some information about how lenders are implementing HARP 2. Everybody's different, and no two lenders are acting the same on this, so there's different guidelines with every lender, so you need to be aware of that. And then finally I want to share with you, and I think I did in a previous video, my video on YouTube about rate versus purchase, why buyers should be buying now, even if they think that real estate prices are going to go lower, which in the state of Hawaii we're starting to see a lot of stabilization, so I don't think real estate prices have much further to drop, if any. So let's just start off with what happened on Friday. Again, on the mortgage-backed security bond market, we hit the all-time low for interest rates, or the all-time high for prices of mortgage-backed securities. So that's going to play nicely into your client's purchasing decision. Right now you can actually get a 30-year fixed at 3.625% with only a half a fee in origination. So again, that's the lowest I've ever seen it. An APR at 3.689, that's just unbelievable. So let's talk a little bit about what's driving the mortgage-backed securities market and why interest rates are so low. The main issue is that we continue to have negative economic news. Everything that we're hearing is suggesting that the economy is not rebounding in any significant way. You put that on top of the weakness in Europe, it's really dragging the markets down. Investors are leaving the European Union, and there's a flight to safety. They're buying up U.S. Treasuries and mortgage-backed securities. That drives interest rates down and the price of those treasuries and bonds up. So again, the price goes the opposite direction of rate. So as the people buy up the treasuries and mortgage-backed securities, rates drop. Also, it looks like the French have elected a socialist president. That's going to drive more investors out of the European Union. And it was really bad for the euro. The euro dropped again in value against the U.S. dollar. So again, that's bad for investors. Investors look for a safe haven and start buying up mortgage-backed securities and treasuries. Other news: we had personal spending that dropped. Manufacturing has dropped. Factory orders have dropped. Initial claims are still way up at 365,000. That number needs to be way down. Maybe 250,000 a week. So again, jobs numbers are not good. We look at non-farm payrolls here of only 115,000. That should be up around 400,000 or 500,000. So we are way off where we need to be to see this economy recovering. And the only news that was really positive is that unemployment rate dropped from 8.2% to 8.1%. But again, this number is a little, it doesn't jive with what's happening with the payroll figures. And the reason is people are falling off the unemployment rolls and may actually stop looking for work. They've gotten discouraged, decided to stay home and maybe homeschool their kids or something like that. So while the unemployment rate dropped, the real backbone of the of the market is jobs, and we're not creating jobs. So that's going to continue to drive the market. I don't see much change in this over the next 60 to 90 days. I don't think the interest rates are going to stay this low, but they will stay low, maybe around the 4% mark, for the least in through mid to late summer. So that's my forecast for now. We'll keep watching it week to week. But I think that this bodes really well for the summer selling season for real estate agents in the state of Hawaii. Again, I don't think they're going to stay quite this low, but I don't see anything driving interest rates up for now. And this is just gives you a graph of mortgage-backed securities. Now remember, as the price of the bond goes up, the interest rate goes down. So we want to see these high prices. And you remember about a year and a half ago, rates started heading up, and then back 12 months ago, back in March and April of last year, the bond price started heading up and interest rates started going down. And we've hit two all-time low times. One was on February 2nd and one was on Friday the 4th. So these are the lowest ever recorded. We've never had the coupon, the 3.5% coupon for Fannie Mae trading over $104. So this is unprecedented. Probably won't stay here, but you never know. I mean, if we get some other negative news, we might get up in the mid 104s, which would really be outstanding. So we'll just keep an eye on this and see where it goes over the next few weeks. But I see it, bouncing around in this area, 102 to 104, which means interest rates should stay below 4% for the foreseeable future. Again, this is the 30-year fixed mortgage rates over the past 6 months. We were up above 4% just back in November. Dropped back down. We had a little blip up in March and April, and now we've headed all the way back down again. And remember, look where eMortgage Hawaii is, down here at 3.625%. The difference between this and the national average is just a lot of profit taking. Certainly the local lenders are generating a lot of profit by not offering this low 3.625%, or if they are, they're offering that with very a number of points, not just 1/2 of a point. So have your clients shop around, and really that is my job, to help them shop for the best interest rate out in the market, and we'll shop all the lenders for them. This is the conforming rates. As you can see, this is the first time I've ever quoted 3.625 with only a fee of 1/2 point. The 15-year fixed dropped below 3% now at 2.875 with only a fee of 1/4. And the 5 and the 7-year ARM have just been hanging around the same rate. They haven't changed any. I'm not quite sure what's driving that, but 2.875 and 2.5% with a very small origination fee. And jumbo rates, continue to improve. Most lenders are offering jumbo rates around 4 1/4. 15-year fixed at 3.5, and then the 7 and the 5-year ARM are again very close to what the conforming rates are. So it's good for everybody, whether you're conforming, you're borrowing on the conforming or the jumbo. Rates are just as good as we've ever seen them. I want to point out that for those buyers that don't think there's volatility in interest rates, just 12 months ago we were about 5% on the 30-year fixed, and we used to consider 6 1/4 to be quite low, and that wasn't too long ago. So being down here at 3.625 is just terribly unusual, and it can't be sustained for any length of time. I think we're going to get through the summer, somewhere around 4%, but mortgage rates shouldn't be this low. And again, if they get back up to 6% or so, which isn't hard to do, and you look at the buying power, you've just increased the cost of that property by about 25–30%. And I have a video on YouTube that sort of goes through an example of this, on how impactful the interest rate is on what you end up paying for a home over the life of the loan if you do borrow money to buy a home. So it's a good video to watch. I'll give you the URL here shortly. Okay, the last thing I want to talk about is HARP 2. Remember that HARP 2 offers unlimited loan-to-value on refis, and there's some rules to this. If you want to see a more in-depth discussion on HARP 2, go to my YouTube channel, and or just copy in this URL into your browser, and you can watch that video. But basically, they removed the cap on loan-to-value, so now it is unlimited. And not all lenders are following this now, but that's what Fannie Mae and Freddie Mac are offering. The loan has to be a Fannie Mae Freddie Mac loan originated before May 31st, 2009. So if a client has a loan that they got after this date, we can't do that through HARP 2. Again, the loan has to be owned by Freddie Mac or Fannie Mae, and you can go to their websites to see if your loan is owned by one of them, or call me and I can go through that and find out who owns your loan. Those websites are kind of tricky, so we're pretty good at it, and it'll take us less time to find out if your loan is owned by Fannie Mae or Freddie Mac. And remember, the beautiful part of this is you can get a loan, it could be 150% loan to value with no mortgage insurance if your current loan has no mortgage insurance. This is another thing. People thought that this program was only good on primary, but it is good on all types of residential property, primary, secondary, and investment loans. So, whether you bought a property as your primary and you've now moved out and it's a rental unit, you can still refinance it under HARP 2. There are some other rules. Freddie Mac doesn't allow any 30-day lates in the last 6 months and only one in the last 12 months. And Fannie Mae doesn't allow any 60-day lates in the last 12 months. And again, each lender has their own guidelines that they overlay on top of these guidelines. So, you really need to know each lender, and that's really our role as a broker. There are some lenders that are requiring certain FICOs. Fannie Mae and Freddie Mac actually don't talk to what the FICO requirement is. If you get an eligible approved, then it doesn't matter what your FICO is, but generally the lenders are underwriting to 620 FICO on primary, 680 on seconds and investment. But again, depending on what the underwriting engine shows us, there may not be any FICO requirement or income verification for that matter. So for those of you that are self-employed, this might be an opportunity. It's not always black and white in how the lenders are going to apply guidelines on FICO requirements and income verification. But we have had lenders that have waived that or even waive appraisals. And remember, I think a broker is probably your best source because we deal with multiple sources and not every lender is going to act the same. For example, Wells Fargo won't refinance a Freddie Mac loan unless they service it. So there are a lot of different rules on this, and I think it's in your best interest to work with a broker that has a lot of different lending sources. So the last thing I wanted to cover, and this is again in a YouTube video that you can go to this URL and watch this video on why you should buy now versus waiting for real estate prices to drop even further. And really these are the fence setters that are waiting for a better and better and better deal. I can show you that they could find a home that's valued 10% less and end up paying 20% more just because they don't take advantage of today's interest rate. And they really have to understand that when you're buying real estate with borrowed money, the interest rate is actually more important now, I think, than the price that you pay just about. So it's a very important aspect to the buying decision, and buyers have to understand the volatility of interest rates. And again, I think recently we've seen that the U.S. housing is beginning to stabilize. Certainly it has in the Hawaiian real estate market. So if they're expecting a much deeper drop in real estate prices, I think that's behind us. I think what's ahead of us are higher interest rates at some point. So we're pretty assured of that, not further dramatic declines in real estate prices. And again, we are seeing that the housing industry is stabilizing here in Hawaii for sure. So go to this YouTube video and you can get some more information that you might want to share that YouTube with your clients that might be sitting on the fence. And finally, I have a mortgage calculator for your smartphone if you have an iPhone, an Android, or a BlackBerry. It not only calculates your mortgage payment, but it also can pre-qualify your buyer. But finally, I upload my mortgage rates on a daily basis so that you can see what conforming to jumbo rates are every single day. It'll be right there on your smartphone. So when a client asks you what are interest rates, you say, okay, let me look, and it's right there on your phone. So you look like you're well informed and you have a good grasp of where interest rates are. So all you have to do is go to your loan app store and search for the word loan apps, all one word. Download the application, enter my cell phone number as the activation without the dashes, so 808-896-6800. Well, I appreciate it. Thanks for listening, and if you have any questions, please call me in my office at 334-6201. I'm available 7 days a week. Our office is open from 7 a.m. to 5 p.m., and I am available on weekends and evenings if you need any questions. Thank you.